Welcome to the C-Suite series presented by Channel Check and Noble Capital Markets. Noble's an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on Channel Check. Today's interview features Alvopetro Energy, OTCQX ticker symbol ALVOF, TSXV ticker symbol ALV. Noble Senior Research Analyst Michael Heim interviews Alvopetro Energy President and CEO Corey Ruttan. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on Alvopetro Energy, all at no cost. And now, here's Michael and Corey.
All right, thank you, Corey, for being with us. Let's jump right into this. Since this is your first time doing a C-Suite interview, why don't we start right at the beginning? Tell us a little bit about Alvopetro and what its main business line is.
All right. Thank you, Mike. Almost exactly 2 years ago, Alvopetro became the first independent company in Brazil to deliver sales specified natural gas into the local distribution network. We're producing natural gas from our flagship project, which is called Caburé. And in conjunction with that, we constructed some highly strategic gas processing infrastructure in the Reconcavo basin in northeast Brazil. We're in the state of Bahia, just north of the city of Salvador. So, with this infrastructure in place, we're now uniquely positioned to unlock the rest of the natural gas potential in our inventory. And we're in the middle of a rather exciting 2022 capital program as we speak.
So what makes Brazil and specifically the Reconcavo basin an attractive place to invest?
Yeah, well, one of the things we talk about a lot, and we've done this at our two prior companies, once in Ecuador, once in Colombia. What we try to do is look for the best combinations of geological prospectivity and fiscal regime, and we certainly feel like we have that here in the Reconcavo basin. It's actually Brazil's oldest producing basin. We're able to generate internationally linked pricing. And when you look at the fiscal regime, our royalty rate on our project actually just got reduced down to 8.5%, and our project qualifies for a 15% income tax rate. So with that, we're able to generate some of the best margins in our industry. And then I think the last thing that's particularly attractive about the Reconcavo basin is, it's a quite well-developed area. We're actually delivering the gas right into an industrial complex that sits about 15 kilometers to the south of our core project. We're in a basin that has more natural gas demand than it has production, so we're really ideally situated.
You mentioned the price resetting mechanism and how it's based on international pricing to some extent. It's a little bit unique for an energy company. Why don't you explain a little bit more how that works?
Yeah, and this was really the first gas sales agreement signed between a local distribution company and someone other than Petrobras in Brazil. So what we negotiated was basically a price formula that gets reset every 6 months. And it's based on a basket of international benchmark prices. So Brent oil equivalent, Henry Hub natural gas, and UK NBP prices. You average those over a relatively long period of time with reduced weighting for the more historical benchmark pricing. That in itself creates kind of a natural hedging effect. And then on top of that, we've got a floor and a ceiling embedded within our contract. So it really reduces the amount of commodity price volatility that we have, I would say, relative to our peers.
So you touched on might be some delays in terms of compared to prevailing energy prices. And we just had an increase in February, but we haven't even seen a full quarter impact of that yet. At the same time, you've been doing a pretty good job of keeping your operating costs flat, and you talked about royalties. What are your expectations about operating costs going forward?
Yeah, so, really, when you look at the pricing and the costs and everything, what it boils down to is an operating netback. So profitability per unit of production, partly because of the fiscal regime, partly because we have, very low cost natural gas production. What we end up with is best in class operating netback margins. So our profit per unit was about 87% of our revenue line when you look at the first quarter. So that's about as good as it gets in our industry. From an operating cost perspective, I would expect those to be relatively stable going forward. From the royalty perspective, I talked about the recent reduction we had from 11% down to 8.5% in our royalty rates. Royalties are a little more complicated because they're based on a reference price that's linked to Henry Hub gas. So obviously we've seen some more volatility in Henry Hub prices as well that can have an impact on our royalties. So, that could be a little less predictable for people. But overall, our cost structure is quite low and our margins are very high.
So these high netbacks are really starting to lead to, very positive cash flow generation. You've already paid down almost all your debt. You initiated a dividend. How do you balance the two potential goals to both invest in the company at the same time return to shareholders?
Yeah, so obviously, record production and record operating netbacks led to a record quarter for us in the first quarter. We generated funds flow from operations of nearly $11 million in the first quarter alone. You mentioned that well, let me start first by just talking about kind of the capital allocation model that we have, and we've been talking about this for an awful long time. We've had a long-standing view that E&P companies have overinvested and under-delivered returns to stakeholders. And what we did is very early on, we were explaining to our shareholders that we were going to follow a more balanced and disciplined approach, where we took roughly half of our cash flows, reinvested those in organic growth, and then took the other half and returned those to stakeholders. So the stakeholder part of that, like you said, in the first 18 months, we very aggressively repaid debt. It's almost completely gone at this stage. It represents just 1 month's cash flow. But in addition, we started our quarterly dividend program to shareholders. So we started that in the third quarter of last year. That was about 6 months ahead of plan. And we've already increased the dividend by a third. We're now paying US 8 cents per share quarterly. We just recently, 5 or 6 days ago, announced the Q2 2022 dividend as well. So the other thing that's happened to balance that out, consistent with our model, is we are embarking on a pretty significant 2022 capital program targeting organic growth. We've got a near-term objective of growing our production by 25%, and then a longer-term objective of doubling that again. So, the program's off to a good start. It's balanced between exploration and development. We've already announced one exploration success, and we're drilling the second well right now.
Before we leave the return to stakeholders argument or questions, to date you haven't been doing share buybacks. Do you see that as something in the future, or are you really more focused on dividend increases?
Yeah, so certainly that's something our board will continue to monitor as we look at the stakeholder return part of that equation. Like we chatted about, we virtually eliminated the debt part of it, so it really does open the door for something like that. As the stakeholder portion becomes virtually entirely allocated out to shareholders. So it's another tool we could put in the toolkit. Personally, I actually have a bit of a preference or a bias for dividends and trying to continue to reward our long-term shareholders that want to continue to be shareholders. But I can see the advantages of doing a balance between the two as well. So stay tuned, and that's something we may look at in the future here.
Keeping a balance is certainly a noble, but it's got to be hard to ignore the returns you can get on investing back in the business at these prices. You mentioned a 25% goal of growing production. What do you see as the biggest challenges to growing production? Is it drilling? Is it more pipeline? Is it the processing plant?
Yeah, the easy answer obviously is it's a little bit of a mix of everything. Fundamentally, our business relies on technical success on the exploration and development side. So step one, that's obviously important. From the processing capacity standpoint, we're in the process of finalizing the first expansion to our gas processing facility. That'll add an additional 25% to our productive capacity, and that'll be available to us here in the next few weeks. As I mentioned on the exploration side of things, we did announce a success a couple months ago when we're drilling the second location right now on the fault block immediately east of where we made this first discovery. With success on one or both of those, we'll be building a new pipeline. So it's anywhere between 12 to 15 kilometers straight north of our gas processing facility. So with that, we need a permit and we need to construct it. So a practical timeline for new production from those discoveries would be roughly within a year's time frame. We also have a development project, a deep basin gas project immediately north of our Caburé project called Murucututu. We're much further ahead on this. We've actually already constructed the pipeline extension to tie in the first of the wells there, and we're in the final phases of constructing the field production facilities there. So within the next few weeks there, we'll be able to put the first well on production, and then we'll have all the infrastructure in place to more broadly develop that asset starting in the second half of this year. Probably the last thing to comment on are, just permitting and managing supply chain issues are always can have an impact on our timeline. So I would say that was a long answer, but all those things together really help dictate the pace at which we can reinvest.
So if the drilling in 2022 connects and in the pipeline expansion, you mentioned a year or so, is the next step then another expansion of the processing in addition to what you've done this summer?
Yeah. So step one is this first in this call it phase one expansion was always contemplated in our initial design. We think we can relatively easily expand that probably by another 25%. But if we're looking at meeting our longer term objectives, we're probably looking at duplicating some of the trains within the facility and adding more mechanical refrigeration capacity. It would all be we could do that all on the existing footprint. But yeah, certainly that's something in the medium to longer term we'll be looking at.
How about on the demand side? If you do some of these expansions, is there enough demand for all the gas?
Yeah. So like I pointed out earlier, the good news about the basin we're in is there's more demand than there is production. So the marginal barrel or the marginal MCFs are actually being imported via LNG at a very high cost, not very efficient, obviously. So if you look at it in pieces, in the near term, we'll be able to process about 18 million cubic feet a day. The city gate that the off-taker built right at our physical locations capable of 70 million cubic feet a day. So there's lots of room to grow that. And then if you look at the overall capacity, the demand in the nearby area within our basin alone, it's about 150 million cubic feet a day of total demand. So there is good room for growth there.
How about acquisitions? Is there any chance of picking up other properties around where you are, or even other step-out properties?
Yeah, certainly. The processing capacity tied right into the local distribution network like we have is highly strategic. I think there's opportunities, but if we want to do this, we can look at third-party processing within there, which is kind of a knockoff business development possibility. But our preference, ideally, we can use that infrastructure to help others accelerate their commercialization at a higher value of their natural gas in the nearby vicinity. So, these things are difficult to comment on. Obviously, we can add more value to shareholders by growing organically, but if there's complementary A&D type activity that we can undertake, certainly that's something we'd be open-minded to. The state oil company Petrobras, is either completed or in the process of completing the divestiture of virtually all the onshore oil and natural gas production in our basin, as well as pretty much every other onshore basin in Brazil. So it's a really unique moment in time in Brazil, and I think you're going to see a lot more of that type of activity as the market continues to develop and mature.
How about the investor relations side? The stock has started to do pretty well here this year. Do you attribute that to the dividend, setting a dividend, or do you think it's really more due to some of your exploration success?
To be frank, I think we're just starting to get caught up to where we deserve. We've announced an awful lot of good news this year. It started with we updated our reserves and showed a over 50% increase in our net present values. I talked about our record Q1 results. We increased the dividend by a third. We announced some exploration success. So I think it's a combination of all that. And yes, I do feel like we're getting a little bit more attention and that the dividend does help. But I think, frankly, we've got a lot more room. The stock is still extremely undervalued, in my opinion.
Is there anything else we really haven't touched on you'd like to discuss?
Yeah, I think for anyone who's looking at an investment in Alvopetro, I really do honestly believe we're quite a unique opportunity. I think the results speak for themselves. We've been delivering well ahead of pre-commercialization expectations, and then no matter what your kind of investor focus is, we offer a pretty compelling yield at current prices. It's about 6.5% yield. If you're a value-focused investor, we're trading at around half of our 2P, so proved plus probable net asset value, and under 4 times annualized cash flow from operations. And then if you're a growth investor, I think if you look at our 2022 capital program and the value that it has that we could potentially unlock with that, especially when you compare it to a $165 million market cap, these are the things that can create step changes in our share prices that I think is, when you look at, to be able to get all 3 of those things in one investment, I really do feel it's quite unique.
Thank you for joining us for this C-Suite interview presentation brought to you by Channel Check. View our YouTube channel for more video content, including C-Suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.